All right, let's get more insight into Alibaba's strategy and earnings with Dan McClory, Managing Director at Bonwick Capital Partners. Dan, good to see you.
Great to see you, Michelle. Thanks for having me on the show.
So Dan, Alibaba's fourth quarter earnings showing revenue was up 39%, the highest rate of revenue growth in 4 quarters. Does this tell us that the Chinese consumer is resilient and continues to spend despite the growth slowdown?
I think it does. It's probably the most visible example and the most easily monitored example of consumer spending in China. I mean, these are massive numbers by anyone's estimation, and especially in the face of somewhat declining growth in China, they're all the more remarkable.
Well, Dan, Alibaba is now looking outside the top-tier cities for growth, making a big push into rural areas to increase its users. How is it doing on that front?
Actually quite well. When you look at the segmentation of sales, so rural sales are up about 15%. Urban varies between 6 and 9%. So certainly on a percentage basis, they're gaining. They're adding new locations constantly. And I think this is all going to be part of how they get to that trillion-dollar number.
Well, on the shopping front, how is Alibaba doing compared to its competitors like JD.com?
Well, you know, it's interesting, Michelle. If we wanted to do a legitimate comparison of Alibaba, this is a behemoth now. Okay, so this is Amazon meets eBay meets PayPal, plus a lot more. So you could take apart those separate businesses and start to compare. Clearly, they're the e-commerce leader in China. Their growth continues to outstrip that of their rivals. But remember, when you look at JD, for example, that's a direct-to-retail platform, as opposed to Tmall, which brings in a lot of outside merchants who are just selling through the platform that exists at Alibaba. I think another area, though, Michelle, is on the international, where they're really coming into their fore. You're going to find now Costco, Macy's, Woolworths are all available at Tmall.
Dan, to your point, it's indeed a behemoth, and part of that behemoth is Alipay, the mobile payment service. How is it doing in comparison to Tencent's WePay?
I would just use the word domination. Continues to be the largest payment system in China today. Remember, this is 450 million users. What I like to look at, Michelle, from a financial side is it is inside of Ant Financial, which, if you followed in the last couple of months, Ant Financial is now the second most valuable tech company in the world that's private. They have a $60 billion valuation. They raised $4.5 billion in their latest fundraising round. That's a huge asset inside and alongside Alibaba that we think is really going to play out quite nicely.
Dan, another huge asset, AliCloud, revenue there growing 145% year over year, now accounting for about 8% of the company's total sales. Is this where you see future growth coming from? I
do. That's 500,000 paying customers. Again, impressive numbers. But Michelle, think back to Amazon when they launched their cloud services 3, 4, 5 years ago. That's the growth inflection point that Alibaba finds itself at right now. So if you like the way that affected Amazon, you're really going to like the way this helps to grow and catalyze Alibaba. Dan, there's tremendous growth in the company. You can't argue that. Revenue was up, a lot of diversification, but profit was down, missing estimates, and largely because of the huge acquisition spree that Alibaba's been on. Alibaba paying $1.5 billion for a food delivery service, buying Lazada, the Southeast Asian retailer. Alibaba's been spending heavily to expand in everything from e-commerce to entertainment and media. What is the strategy there? Well, I think it's continued diversification, and it's leveraging its platform and its bulk and its size to move into many different sectors. Some might question, for example, the move into traditional publishing, spending $250 million on the South China Morning Post. That's one that's gotten a little bit of scrutiny. But investing in cloud, investing in international, investing in Ant Financial, I mean, these are all tremendous drivers of growth that will continue to pay dividends. They'll just take it a little bit of an earnings hit in the near term.
Dan, very quickly, Alibaba's stock up 4% today, down 3% year to date, losing about 30% from its November 2014 high. Why are investors still skeptical, and what's your view?
Well, I look at it slightly differently and say, from its low 7 months ago, it's up 33%. So I'm looking at a different assessment point. But it's skepticism. It is skepticism about the numbers. Gross merchandise value, that metric has been discussed many times, even prior to the IPO of Alibaba. So there's not a whole lot of coalescence around that metric. It appears to be something that perhaps can be affected. So that's one. I mean, I think the best example that I could give you, Michelle, is if Amazon had reported the results that Alibaba reported today, the stock would have been up 15 or 20%. Instead, it's up 4%. That's the China factor.
The China factor. We're going to have to leave it there. Thank you so much, Dan McClory, Managing Director at Bonwick Capital Partners.
If you like what you just saw, follow us on social media and visit our website, cctv-america.com.